Today's topic for the health insurance exam is the crucial distinction between individual and group health insurance. Let's start with underwriting. For an individual policy, the insurer performs individual underwriting, meaning they scrutinize your personal health history and medical records. An exam question will often test this by asking what the primary source of underwriting information is for an individual plan. The correct answer is the application, which contains the applicant's medical history. A key difference in group underwriting is that for larger groups, little to no medical information is required from individual participants. For an employer-sponsored plan, the insurer evaluates the risk of the group as a whole, not each person. A common exam trap is a question suggesting that one very sick employee could cause the entire group to be denied coverage. This is false. The insurer's decision is based on the collective risk, not one individual's health, because that risk is spread across all participants. This leads us to how premiums are determined. Group plans, especially for larger companies, often use experience rating. The insurer looks at the actual claims history or the experience of that specific group from the previous year. If the group had many expensive claims, their renewal premium will likely increase. In the individual market, community rating is common. This means the insurer charges everyone in a specific geographical area the same price for the same plan, primarily adjusted for factors like age or tobacco use, but not their personal health status. The biggest concern for insurers, and a key exam concept, is adverse selection. This is the tendency for people with a higher risk of loss to seek out insurance more than people with a lower risk. The individual market is highly susceptible to this. If only sick people purchase plans, the insurer's risk pool becomes unbalanced. Group insurance, however, naturally minimizes adverse selection. The group was formed for a reason other than buying insurance, namely employment. This creates a more balanced mix of healthy and less healthy individuals, spreading the risk. The exam will frequently ask which type of insurance has the lowest risk of adverse selection. And the answer is always a large group plan. Here's a simple way to remember the underwriting difference. Groups are a mix, individuals are a fix. In a group plan, the insurer gets a natural mix of risks. For an individual plan, the insurer has to fixate on your specific health details. Finally, remember the fundamental structural difference for your exam. In a group plan, the employer is the policyholder and receives a master contract. The employee simply receives a certificate of insurance as evidence of their coverage. In an individual plan, you are the policyholder and you own the contract directly. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.